Good morning and welcome to RPC's year-end preparation webinar. Running time for the presentation is about 30 minutes with additional time at the end for any questions. You have all been muted on today's call. However, if you have any questions during the presentation, please feel free to submit within the chat box. We will answer any questions after the webinar is completed. Our presenters today will be Josh Kegley, our National Sales Director, and Cody Elwood, a plan consultant here at RPC. Josh assists advisors across the country with designing the right retirement plan for their clients, and Cody here works day-to-day with your plan sponsors to ensure that their retirement plan is following each rule and regulation. And with that, I'll turn it over to Josh and Cody.
Hello. As mentioned, my name is Cody Elwood. I'm a plan consultant here at RPC. So we'll start by going over the agenda for today. We're going to go over some recent updates, talk about the upcoming enrollment period, what to expect at year end. Josh will have some ideas to grow your business, and then we'll have some time for questions. So at RPC, I assist plans with their day-to-day needs and ensure that plans are operating in compliance with all rules and regulations. One recent regulation I wanted to take a look at today has to do with hardships, which are an in-service distribution that is allowed for certain reasons, such as medical expenses or to prevent eviction from the participant's home. The IRS recently made some changes to hardship requirements that really loosen up the rules, and I wanted to hit on a couple of those changes today. One of those changes was to remove the requirement that those taking a hardship had to stop deferring for a 6-month period. Employees can now take a hardship and continue to defer to the plan. Another change is that participants are no longer required to first take a loan from the plan if the plan offered loans and they had not already reached the loan limit. Participants that qualify for the hardship now have the freedom to decide if a hardship distribution or a loan best suits their needs. Due to these changes, RPC completed an amendment to all plans that allow for hardships. If the plan allowed for hardships from all sources, no signatures were required. However, if the plan only allowed for hardships from certain sources, such as employee deferrals and rollover monies, the amendment needs to be signed by the plan sponsor. RPC reached out to all plans that needed signatures in November and will continue to follow up as needed. We'd like to have all signed forms back before the end of the year and may require some advisor assistance to accomplish that. Earlier this year, RPC enhanced some security features and now require that all participants enter a PIN that they receive via email or text when logging into our website. This feature provides an extra layer of security to ensure the rightful individuals are logging into their respective accounts. We are also using this process to verify participants who call into RPC. Beginning on January 1st, sponsors will also be required to log in using this method, but will not be required to use the PIN verification when calling in. Advisor logins, however, will not be affected. But if you are an advisor and log in using the sponsor role, you will be required to use a PIN. For this reason, you may want to use the advisor role rather than the sponsor role. Another big change that recently occurred is that some of our plans have moved from the TD Ameritrade trading platform to the Matrix Trust Company trading platform. This occurred due to Matrix buying out TD Ameritrade's retirement custodial business, and we believe this shows how committed Matrix is to the industry. We previously worked with Matrix on about half of the plans that we record keep, so the transition has been very smooth. However, due to the change, there are new check remittance instructions, and sponsors may notice that the ACH draft on their bank account is now showing as either MG Trust, Matrix, or Broadridge, depending on the bank, rather than TD Ameritrade. We were very diligent in informing the affected plans of these changes, but I wanted to provide one more notification as I've noticed these questions come up in the past few weeks. RPC also recently sent out notification to remind plans of the January 1st enrollment period. There are different enrollment periods for each plan, but the majority of them allow entry on January 1st. Sponsors and advisors can access enrollment materials online by sending an email to admin@retirementplanconsultants.net or calling us at 877-800-1114. These channels can also be used to receive assistance in determining the eligibility for new hires. In addition to the enrollment period, January 1st is a great time for participants to assess their deferral rate. The 2020 elective deferral limit has been increased to $19,500. Individuals age 50 or older can defer an additional catch-up contribution of $6,500 for a total limit of $26,000. We encourage advisors to work with owners and others who have historically deferred to the limits to ensure the contribution rate is adjusted for this change if desired. In mid-November, sponsors received an email with instructions on how to download and distribute annual notices and fee disclosures to the plan participants. The annual notice needs to be delivered 30 days prior to the beginning of each plan year, so for a calendar year plan, they should have been distributed on December 1st. If there are any questions on this deadline or the distribution process, please contact your dedicated RPC representative or our general line at 877-800-1114. The majority of plans that RPC provides compliance services for are 12/31 year-end plans, which means that we will begin the annual compliance review in January. Sponsors will receive an email with instructions to complete the plan's annual data collection the second week of January. Advisors will also be CC'd on this email. We will then use this information to complete the annual compliance testing and prepare any employer contribution calculations, such as a profit-sharing contribution. All employer contributions need to be made to the plan by the company's tax filing deadline in order to be deducted on the 2019 taxes. This does include extensions if the company files for one. Once the compliance testing has been completed and all contributions have been funded, RPC will prepare the plan's annual 5500, which is essentially a tax return for the plan. Once prepared, we will reach out to the company contact for signature and file on the company's behalf. The initial deadline for the 5500 is July 31st, but we can extend this to October 15th if necessary. I'll now turn it over to Josh, who has some ideas on ways that you can grow your business.
Thanks, Cody. Good morning, everyone. Again, this is Josh Kegley, National Sales Director. I just had a couple items I wanted to go over here regarding ideas of ways you can continue to grow your business. The first one is profit sharing. So for many of you, when you were setting up these plans with us, hopefully you worked with the regional director, talked about the goals for your business owners and how to maximize contributions, usually to the owners and partners. And some reminders on profit sharing. If we did provide that illustration, or if you'd be interested for current clients, our team here at RPC will prepare those illustrations. There's no additional charge to do so. And profit sharing is always written in our plan documents as discretionary. So the employer is not locked into any certain amount or percentage that they have to give every year. It can be 0 one year, and then the next year they could max it out, or any number in between. So it's great just to open that conversation with your clients. If you're touching base with them before the end of the year, this is something that you should mention to them is, remember when we set this plan up 4 years ago, we talked about you have the option to do this discretionary profit sharing after the end of the plan year. Let's take a look at the numbers this year. And typically we'll start with to maximize the business owners. And let's say that amount was $150,000 to the company. Well, if they come back and say, we want to do something, but maybe we don't have the cash flow to do $150,000. Can you show us what $75,000 would look like? Or we have this really important manager. We want to give them a higher percentage than the rest of our employees. Please show us if that's possible and what that would look like. So really walking through the goals of those profit sharing right now and right after the end of the year when they provide us the census is the time to be doing that. and then they have until their tax filing deadline to submit those profit sharing contributions. Another reason to be having this discussion is this time of year, most owners are looking for that additional tax deduction. This is an option that they can explore to see if it's a good fit. This time of year, they're usually talking about, all right, are we giving an employee bonus at the end of the year, a Christmas bonus, something like that? If they've maybe done 5% in the past, sometimes owners look at it makes sense to split that up, maybe do half to the retirement plan and profit sharing, and the other half we can give them their bonus. If they do that, then they're going to get a company tax deduction. They're going to avoid some of those payroll taxes. So, that now's the time to have that discussion and see if it makes sense. And as I said, connect with your regional director, connect with your TPA relationship manager, Cody, or someone on their team, whoever your contact is, to see if this makes sense for your clients. Then the other item I want to talk about is just additional marketing resources that our team can help you out with. So if you want to connect with your regional director that you work with, and they can help you with any startup plans and consulting. If you're talking to your own personal wealth clients this time of year, great time to discuss with them if they currently have a SEP or they're doing a simple plan. Maybe they're looking to increase their deductions. They're looking for additional tax deductions this time of year. Maybe they're just growing and becoming more profitable. So this is the time of year to see if it makes sense to switch to a 401k, or if they have a 401k that they're already maximizing, maybe it makes sense to look at adding a cash balance plan on top of that. Another thing that we can assist you with is running a list of plans in your area. So we have access to a software where we can run a search of plans by size. So if your kind of key market is plans that are 1 to 5 million, we can run you a list of just those plans. We can run it by industry. So if you have a certain niche that you work with, maybe construction companies or dental offices, whatever that might be, we can zero it in by industry and also number of employees. So some advisors we work with say, hey, I'd prefer smaller companies with under 25 employees, or they like working with companies 1 to 200 employees. Whatever that is, we can search and kind of scrub that list so that it fits your ideal client. And then finally, think of us as an extension of your back office. We want to help you develop a game plan to grow your business, help you come up with marketing ideas and strategies and materials. So, if you have more of an established firm and you have a great group of business owner clients that you're already working with, but maybe you haven't approached them about retirement plans, we can help you develop that strategy. When are you going to bring it up? What's that ideal meeting look like? What information do you need to request? If you're trying to go outside of maybe your current book of business, do you have a niche? How are you going to approach the market? What type of materials should you have? Do you want to do things like a mailer, a postcard, networking? We're happy to help you develop that strategy, maybe give you some tips of things that we've seen other advisors and firms that we work with utilize that have been successful. So, please keep us in mind, involve us in that planning process, and we're here to help you grow your business. That was all I had for today. So any questions, we'd like to open up the forum, and please raise your hand or jump in and ask questions.
Hey Josh, it looks like we just have a couple questions here. So the first one is for Cody, and our sponsor is going to have to use a PIN every time that they log in.
So there is an option for sponsors to select to remember this device. So when they go ahead and enter that PIN, and if they hit that remember this device option, then they will only be prompted to do that. I believe it's every 90 days to log in. So they do not have to do that every time if they select that option. But if they logged in from a different device, they would have to do it. It's just a security feature to make sure, like I said, that the correct people are logging in to the accounts.
Yeah, and I have just a quick comment on that. You've all probably noticed that we've rolled out some additional security features this year. If you're receiving any email updates from any of the industry providers out there, security is a huge topic right now. So we're doing everything we can on our end to make sure that the plan sponsors and the participants and the advisors, every level is totally secure, especially on the website and submitting data to us. So if anyone is having trouble logging in or getting familiar with the new system, have them give us a call. We're happy to help walk them through it. But I know this is a little bit of change for some people.
And then the last question here is, when do you tell the sponsors that they should be returning their census information?
Yeah, so like I said, for a calendar year-end plan, we're going to send that census out January, the second week of January, and we request that information be returned by February 15th. It'll state in the email that date, but that's the date that we want it by. If we need to complete certain testing, that may need to be done by March 15th. And then also that's a tax filing deadline for a lot of companies. So we want to make sure we have those profit sharing contributions out to the plans so that they can decide what they want to fund and make sure they get it funded before their tax filing deadline. So we definitely, as soon as possible, but February 15th is the requested deadline for the census.
Great. And it looks like that is all of the questions. So we'll go ahead and wrap it up for today. I did want to let the group know that the presentation has been recorded, and we will be sending out a link to the recording as well as the slides. So if you have any questions, feel free to reach out to Josh or Cody. We have a generic email address there at the bottom of the screen if you want to start there with any other questions. All right, and everybody have a good day.